In this presentation, we will take a look at part 4 of an example problem related to a private college, this time putting together a statement of financial position. We're going to be putting together our statement of financial position from a trial balance. Noting that the statement of financial position is similar to an income statement. It's going to be that activity statement, the performance statement. How did we do over some time frame with a starting and an end to it. We're going to have the information that's going to be on the left side. This will be our trial balance. We're going to be constructing our statement of activities on the right side. The trial balance will be in order with the assets in green, the liabilities in orange. Then we have what would be similar to the equity section in a for-profit organization. What would be here, the net assets section in the private college. Under that, we have the activity accounts, what would be similar to the income statement accounts in a for-profit type of organization, here being the statement of activities accounts, and therefore the ones that we will be focusing in on, those similar to revenue and expense type of accounts in a for-profit type of organization. This number down below representing the net of all of these dark blue accounts, what would be similar or what we would expect to be kind of like the bottom line of an income statement type of account, revenue minus expenses type of account, what we might expect in the statement of activities. This is revenue, not a loss, because we're saying here that the credits are greater than the debits in the income statement or temporary type of accounts. So the statement of activities will be constructed on the right. Note we're going to have 3 columns to it. This is why it's a bit more confusing than other types of a for-profit type of organization. Those columns being without donor restrictions, with donor restrictions, and then the total. You can kind of think of these like intercompany type of transactions or a kind of fund type of accounting types of transactions. They're going to basically be breaking them out within those 2 categories. You'll note that over on this side, within the trial balance, we haven't been able to break out 2 columns in a trial balance type format, and therefore had to include the names within the accounts as we constructed these. When we then pull these over to our statement of activities, we're then going to drop these items that say something like without donor restrictions, with donor restrictions, and simply put them into the proper category to indicate that they are without or with donor restrictions. Let's start to construct this thing. We're going to start with the revenues and gains. Revenues and gains, we have the student tuition and fees, and note this is going to be net. So that's going to be these 2 down below. This has a credit balance. This is our major kind of revenue or income type of amount. We're going to say that we have the 234,307 minus the tuition and fees discount and allowance of the 21770. That's going to provide us with the 212,537. That's all without donor restrictions. We don't have anything within the restrictions, therefore the total being that 212,537. Next item is going to be the contributions of the 3,090. The contributions are going to be broken out between that 3,090 and the contributions that have restrictions, including the time restriction and the endowment, the 561, 350 respectively. Having those without restrictions then is the 2,390. Then the ones with restriction is the 911. And note, of course, as we pull these items over here, we have the names, the accounts called, for example, contributions with donor restrictions due to time. Over here, we simply have contributions, then the column telling us with donor restrictions, this amount, contributions without donor restrictions, this amount. All right, next item we're going to have is the investment income. The investment income is going to include the 1,900 and the 1,900 and the 2,270. So once again, we're going to be breaking those out by the investment income without restrictions, 1,900, and the investment income with restrictions, that's 2,270. Next item we're going to have is the unrealized gain. The unrealized gain is going to be down below. And actually, some of the full title got cut off here, so sorry about that. But this one is going to be the unrealized gain. We've got the 2,070, and then we have I believe these 2 amounts that are going to be the amounts with restrictions with the unrealized gain for the scholarship and the endowment. So let's just double check that with the old calculator. 1040 plus the 1800, that's going to be the 2,840. So here's the 2,840 with the restriction, both the scholarship and the endowment. The amount that is not restricted, adding them up, adds up to 4,910. Next, we have the net assets. So the net assets released from restriction. That's going to be these two items. Those are those kind of tricky ones, those kind of confusing ones. The reason these two are a little bit confusing too is that, note, on this side, we've got the restrictions without donor restrictions. And again, these are shortened account names a little bit over here, so bear with us on that. It has the net assets released from restrictions, and then we have the amount without restrictions, the one with restrictions. So the one that does not have the restrictions is going up here, indicated by it being a credit balance. We don't want the credit balance in our statement of activities, of course, so we're going to flip the sign. It's be a positive number over here. So we got the without restrictions is going to be a positive number. And then, of course, we have the item that is going to be with restrictions. The item with restrictions, when we go over to this side, actually has a negative number because, of course, it's going to be represented a decrease on this side. So you just got to be a little bit careful in terms of what does a debit and credit mean on this side. The credits are increasing, and therefore the increase is showing up with just a positive number over here, whereas it's a credit on this side, and then the debits would be decreasing at least the bottom line number, like the net income type of number. And over here, it's going to be represented as a decrease, not by a credit, but by a negative number to show that decrease. Then, of course, the net between those two items will net out to zero. So that's going to give us the total revenue and gains. So the total revenue and gains, if we were going to pull out the trusty calculator, would be the 212,537 plus the 2390 plus the 1900 plus the 2070 plus the 7580. That gives us the 226477. Then we have the 911 plus 270 plus the 2840 minus the 7580. That gives us the 1559. Then we can add up the outer column both ways, right? We can do it the 212537 plus 3301 plus the 4170 plus the 4910 gives us the 224918, also adding up this way, being the 226477 minus the 1559, and that'll give us the 224918 as well. Next, we will have the expenses and losses. So we got the educational and general expenses. We have the instruction expense. So the instruction expense is going to be here, representing a debit balance here. It's going to be a debit balance on this side. Notice all the expenses are going to be without donor restrictions. No restrictions, without donor restrictions. Then we have the academic support. Next, we're going to have the student service expense. We have the student service expense here and here. Next, we're going to have the institutional support expense as well. And then, of course, if we were to add these up, just simply the expense items, this column adds up to 120, 470. Nothing is in without or with restrictions. Therefore, the total column will be the same. And then the total change in net assets. Note that this is going to be kind of like the bottom line number. This is kind of like the net income type number. When you consider why would it be called the change in net assets, because basically it would be the same if this was retained earnings or the capital account. This is typically the beginning balance until we close something out to it, which would be the temporary accounts. The only reason it would not be in a for-profit type of organization is if we had something like investments in there, possibly some type of activity. Otherwise, then it would be the same amount as the beginning. Here, the only change in these accounts will typically be the change in what would be similar to the income statement accounts, the net income type number, the statement of activities number. So therefore, we can simply call it, instead of net income, the total change in the net assets. And the total change in the net assets is going to be the amount up top, the total revenues, minus the expenses and losses, giving us that change. Same in the with donor restrictions column, same with the total column. And then we can also add them up this way, the 6007 minus the 1559 as well, to get to that 4,448. Now we're going to get this back to, we're going to take this back to the ending numbers in basically the net assets section, because remember, there's nothing else going on here. We don't really need the full statement of like stockholder or of statement of equity or statement of net assets, because the only change here is going to be this change in the net assets. Therefore, if we take the net assets beginning balances, which are going to be these two numbers, even though they're on the ending trial balance here, you'll recall they're the beginning number, because if we were looking at the GL, there would be no activity in them throughout the entire time period, because nothing would be posted to them typically unless something funny happened. And therefore, these are our beginning balances. And so we're going to pick those up, and then our ending balances is going to be the 6007 plus the 104,200 for the 110,207. Then we have the 1,559, which is going to be the loss in essence here, and net that out against the 234,209 to get the 232,650. And then we could take the 4,448 and the 338,409 to get to the 342,857, or adding up the 110,207 and the 232,650 to get to the 342,857. Now, if we were to compare our statement of our activities to the statement of financial position, then these last numbers, of course, the 110,207, the 232,650, and the 342,857 will match these numbers here. So we're going to have to match these out. This is going to be the 110,207, the 232,650, and the total of the 342,857. Then, of course, these numbers would match out on or tie out for a balancing concept within the statement of financial position, total assets equaling liabilities and net position.